I'm Kiana Baker, Director of Community Engagement here at Amplify Startups. And we are so excited to be here today in collaboration and partnership with JPMorgan Chase to talk to you all about cap tables and equity management. We have Alan Gold here who is going to share with us best practices, show us a wonderful tool, and really just give us some great insight as founders on how to better manage this for us, because we know that sometimes it can be a pain, and how can we take a little bit of that pain out and make it a lot more organized and enjoyable for ourselves. So before we get started, just a few FYIs and housekeeping. Throughout the presentation, if you have any questions, feel free to drop them in the chat, and I will be looking at those, and we'll try to circle back around towards the end of wrapping up the presentation to answer some of those questions for you. Also, if there's anything that you missed, we will be sharing a link to the recording post webinar. So no worries there if you missed something, or if there's someone that you would like to share this with, then we will be making sure that you get a recording that you can have access to in order to reference it at your leisure. Yeah, and so with that being said, I'm going to turn it over to Alan Gold so that we can get all the knowledge and gems that he's going to drop for us today.
Sounds good. Thanks, Kiona, and thanks everyone for joining today. Appreciate it, and great to be partnering up with Amplify Louisville today. So I'll just give a quick introduction to myself, where I sit within JPMorgan, what our group does, specifically how we work with founders and early stage startups like yourselves. I'm going to dive in and screen share then, and just go through a quick slide and go through kind of three of the main pillars that we see as being super important when it comes to best practices with managing your cap table and your equity as you scale up and as you grow your company. I'll then just jump in and do a quick demo of the tool that we have that will be a great resource for you going forward as you grow and as you start to think about maybe fundraising, as you start to think about hiring and using stock options as part of that process. So I'm Alan Gould. I look after business development and strategy for the cap table management group within JPMorgan. We're actually a group within JPMorgan called Workplace Solutions. We arrived in JPMorgan via an acquisition. So we were originally a fintech business that was founded and headquartered in Ireland. We were called Global Shares. We've been around for actually close to 20 years, but we have two very distinct products. So we have a flagship product that looks after pre-IPO and public companies when it comes to their employee share plan administration. And the side of the house that I work on is the cap table management group. So we look after early stage, high growth companies from pre-seed through Series B typically, but typically early stage, high growth companies is really the type of client and founder that we work with. In terms of how we work with founders, really it's about providing resource. So we have a cap table management solution and a software solution, but it's very much education focused. So what we look to do as part of our group is open up the JPMorgan network to founders and early stage teams, whether it's access to the private bank, whether it's access to the startup banking teams, maybe potentially the investment bank if you're looking to fundraise down the line. So really it's about providing a suite of solutions, education and resource as you grow, and that you know that there's opportunity for JPMorgan to be able to help you throughout the full life cycle, from very early stage from incorporation all the way through to potentially going through an IPO and being a public company. So definitely make this interactive. Really welcome interruptions, truly mean that. So jump in and ask any questions during the presentation, whether it be during the best practices piece or during the demo, if you have any questions on any features or functionality. So definitely jump in and ask any questions. I know Kiona mentioned it's been recorded as well, so we can share around contact details afterwards, and definitely welcome any questions. My contact details will be there, so definitely just ping me with an email and we can find time to schedule a call and go through any one-to-one questions. So I'm going to share my screen and let's dive into the best practices. Cool. Just to triple check, everyone can see my screen?
Yes.
Cool. So I'll go through this super quick, and I think really what we want to be able to do here is just highlight some of the kind of main things to look out for when it comes to cap table management. And even if we reverse from there, what is cap table management? So your cap table is effectively, it's short for capitalization table. Capitalization ultimately means when you take on investment or when you take capital into your business in order to grow it. So what we do in our group is track that from day zero. So what we want to be able to do is track your cap table, which is ultimately it's like the ledger of who owns your business. We want to be able to track that from day zero. So that's maybe you as a solo founder, maybe you have a co-founder or a couple of co-founders, and understanding how the equity and who owns that business from the start. So how that equity is split from the very beginning. Maybe you've two co-founders, maybe you're splitting a 50-50, maybe you have it to 49-51, whatever way you split it, that's really the first instance of your cap table. And that evolves from there as you fundraise, as you maybe bring in angel investors early on, as you bring in institutional investors, maybe you do a bigger seed or a bigger Series A round. And then ultimately when the stock options come into place. So that's really the crux and the initiation of your cap table. So what we want to do today is just go through some of the kind of best practices and also the challenges that will come up with cap table management. So like I mentioned, our group works with some of the world's leading startups, all in high growth mode and typically building the future of technology. That's kind of our typical client is a technology or technology enabled type company. I think every company is almost tech enabled to a certain degree these days. The three key challenges that we kind of see come up now and come up all of the time and time again, is understanding who owns your company and how important that is, using your cap table in terms of preparing for growth and how it impacts your fundraising process, and then preparing for growth when it comes to hiring. So again, typically you'll fundraise, and I'll go into this a bit more detail. Typically the fundraising, some of those dollars are going to be allocated to the hiring process. You need the best talent to be able to build the business, depending on what type of business it is. You're always going to want to hire the best talent, and how you can utilize stock options in your cap table to be able to do that and to retain and motivate those employees. So the first piece is KYC, an old banking term that everyone probably would have heard of in some shape or form, but the way we look at it is know your cap table. So what we want you to be able to think about very early on is, again, starting to think about what is your cap table, what does it look like, how you're tracking it. I'll go into our tool later as a resource for you to be able to actually track all of this from the early days and to be able to prepare for when it does become complex. But the early days is just making sure that you know who owns the company. And this goes back to, like I mentioned, from a founder's perspective. So knowing who you've split the equity with. Have you split it 49-51? Is there three? Is there maybe three co-founders and everyone has 33.3%? And the main thing here is documenting, because I think we come across that quite a lot, where you have early stage teams, you have an idea, you're starting to think about what the idea might turn into. Could it turn into a business? Is there a big enough problem? Is there a big enough market for this to become viable, to create an MVP and then potentially to scale if the problem and the market are big enough? But when you go and fundraise, you want to make sure all of this is documented and stored somewhere secure. So again, back to the platform, that's a key piece, just to know who owns your company and make sure all of it is documented. The second piece is around preparing for growth and how your cap table can assist, but also potentially have a negative impact and create a pitfall. So as we see companies, we speak to companies every day going through fundraising rounds, whether they're pre-seed, seed, Series A, Series B. Knowing your cap table is super important as you're speaking to investors. It's a big part of what an investor, especially a venture capital investor, is going to want to see as they start to look at your company, to start to maybe do some early due diligence to understand, does it make sense for their own investment thesis? They're going to have their own investment targets. They're going to have their own individual investment thesis. Apologies, that's just flicked off. I'm going to represent. They're going to have their own ways of thinking about how they want to invest. So understanding what your cap table looks like, but also making sure that it's clean and up to date and hygienic. That's another key piece that an investor is going to want to see. Part of it is presentation, having your ducks in a row, being professional in terms of how you present, but the other piece is the percentages. An investor is going to want to make sure, okay, do I have enough in terms of my ownership targets? Is there enough space on this cap table for me to come in to buy equity today, but also to model out what the dilutive effect will be of further fundraisers down the line. So making sure that you know what that looks like. And sometimes it can be the difference between a successful and not so successful fundraisers, making sure you have those back end kind of like operational pieces in place and that you can present them clearly and concisely. The third piece um, that we'll touch on is preparing for growth. But when it comes to hiring, and I think this is probably not the first thing maybe that people think of when they hear cap table management. Cap table maybe can be more associated with, again, the ownership, obviously, but the fundraising, sharing it with investors. But it also has a big impact in terms of your hiring and the stock options that are going to maybe be part of that process. So again, we're speaking to founders every single day. We're seeing more and more founders really concentrate on how can I provide an environment for employees, number one, to be attracted to the business, and number two, to stay with the business. So a big part of this is the stock option. So if you think of an early stage employee, they're joining your company really early. They're taking some risk. They're not going and joining a big publicly traded technology company or a larger, more established company. They're taking a risk by joining an early stage technology company. Maybe they're not getting paid exactly the cash compensation that market would pay, but they're getting stock options as part of that reward, and that has the potential to have very significant upside. So really thinking about how stock options can be built into your hiring strategy, but also from an administrative perspective, how much of a knock-on effect it will have to your cap table management, and understanding, again, back to the KYC, understanding who owns your business right now, but who potentially will own your business going forward. Part of the tool, and we'll show you what that looks like shortly, is the modeling, to be able to understand, okay, what does it look like now? But if these two or three variables occur, what will my cap table and company look like as I grow, as I capitalize my business, as I bring more investment into the business? So that's the last thing to really start to think about. I think as you scale, as you start to maybe look around the corners and be strategic with your growth, is how my stock options can be utilized as what effectively is one of your biggest assets to grow the business, to attract top talent, and to retain and motivate that top talent to say, okay, if I'm an early stage employee, I've been here for 2 years, I've gone through part of my vesting schedule, we've raised an extra round, to be able to model out, and that's another piece that I'll show you in the demo of the product, to be able to model out to say, okay, I've stayed my 2 years, I have 2 more years on my vesting schedule, but this is the potential net upside of my stock options, what the value will be. So they're the three main best practices. Welcome any questions. I'll take a quick pause just before I jump in and go through a demo, but welcome any questions. I would love to hear from yourselves as well if there's any interesting stories that you've come across that relates to cap table management. Cool. So I am going to reshare my screen and we can jump in and have a quick look at product. So just bear with me. I'm going to log in and then screen share. Cool. And the goal with this demo really is just to highlight as a resource. I suppose for us as a group, our flagship product in what was Global Shares, which is now Workplace Solutions by JPMorgan, that product has been around for 20 years, so it's super well established. The cap table management team, which I was an early employee of, we've been around and in market for about 3.5 years. So really a big part of this is just making you aware that JP Morgan has a cap table management solution, and just to start to join some of those dots that we touched on with the best practices. Like most often we see early stage teams using spreadsheets. Sometimes they'll have other providers that they're using, which is great. And that's kind of generally what our first encouragement will be, is to digitize this. You shouldn't be using a spreadsheet to track the ownership of your business, and especially as it becomes more complex as you grow. So super important to digitize this, whether you use our platform or another platform. I think that's really the first key piece to tackle as you grow. But the idea here is for you to join some of the dots of some of the terminology and I suppose, what is ultimately financial jargon, and to try and simplify it, but just to join the dots and see, number one, what does it relate to? And then how can it impact your business as you grow? So I'm going to show you three main things as part of this quick product demo. I'm going to show you how we track the ownership. So again, relating it back to knowing your cap table, your KYC, know who owns your business. The second piece we'll go through is around the fundraising. Again, back to the second best practice, but the tools that we provide. So we have a round modeling tool, which founders find super useful to be able to model out, and again, start to see around the corners, to be strategic and start to think about your growth in terms of what your post-money cap table will look like, what dilution will look like. Maybe you've raised early capital using some type of convertible instrument. We'll often hear, and I'm sure lots of you have heard of safe notes or convertible loan notes. just to be able to model those out and understand what it would look like when those ultimately convert. And then the last piece, which is around the stock options. So again, back to the hiring, preparing for hiring. If you raise a big seed round or you raise a Series A round and you start to allocate those funds partially to the hiring process, how you can use your stock options, but also just to be prepared for the administration that is going to come with that, and then some of the reporting and compliance pieces that might come as well. So the first piece is the cap table. Platform wise, what we look to do here is just create a dashboard first and foremost. So it gives you a high level overview of the company ownership that's fully diluted, gives you a quick snippet of who the top shareholders are, gives you an idea here of what the outstanding versus the fully diluted shares look like. You'll see a common theme across the platform from an education perspective where you can hover over these small I symbols and you will be able to see the definitions of what these mean. So we'll be able to give you an idea of what the fully diluted versus the outstanding shares are, as well as the number of stakeholders. So I have 10 stakeholders. This is a demo account, but I have 10 stakeholders in this particular account. This is also important when it comes to pricing. So we are able to offer this platform as part of the suite of JPM solutions free of charge if you have 100 stakeholders or less. So it's completely free of charge if you have 100 stakeholders or less. So we can touch on that afterwards and we'll share around some information post post call, but jump in with any questions if there is any. But completely free access once you have 100 stakeholders or less. If I scroll down, this is then where you're tracking all what you will hear of as referred to as line items. So these are all your individual stakeholders on your cap table. So platform wise, we're tracking who they are. So they're founders, they're investors, they're board members, they're employees, they're advisors, whatever they might be, we'll track who they are. We'll also track what financing round they're involved in. So maybe they were your earliest investors in your pre-seed, maybe they were your seed investors, maybe they came in as the first maybe big institutional investment round at Series A. We're tracking all of that information, as well as the type of securities that they hold. So they might have been issued shares as a founder. They might be an early investor that has some type of convertible loan note. And we can drop down and see all of this detail. So you can see, say, for example, this investor at pre-seed has a pre-money safe note worth 500K. So we're tracking all of that info. It also allows us to filter and edit. So super easy to be able to filter and edit. And then you can export and extract that data based on your filter and edit. Reporting wise, it also allows us to generate a report. So I can do a cap table report and I can also do a reconciliation report. So really, really easy generally across the platform to extract all the data. Uniquely on our platform, we're able to toggle between two views here really easily. So what we've looked at early on is stakeholder view, but I want to be able to see what the share class view is. And again, this is a thing to start to think about as you scale your business. Early days, it's going to be common stock that's issued. So it's typically founder shares or common stock. Your employees will receive common stock through the stock option plans. And then typically investors will have what are referred to as preference shares. So they're investing in the business, and in return, typically what they will receive is preference shares or stock. So this just allows you to have a kind of helicopter view of what that looks like. Again, we're showing the outstanding versus fully diluted status. And this is where your stock options plans will start to come into play. So in this particular case, I have 500,000 shares reserved for my equity plans, which are going to be my stock option plans. And this is typically determined, and this is up to yourself, but oftentimes it's going to be determined at a fundraising round. So you might have a lead investor in your seed round, for example, that says, okay, we'd strongly recommend that you have maybe a 5, a 10, a 15% option pool in place. And it's typically done post money, so post the investment round. So that is put in place to allow you to issue stock options to employees. So this allows you to start that administration process. Similar UI UX to the previous page. This is where you'll see all the detail if we scroll down. So you could have multiple share classes. Maybe you have 2 common stock share classes, one for founders, one for employees. And then you have one set of preference share classes, share class, which is for maybe your lead seed investors or your seed investors in general. We'll also see any outstanding convertible instruments. We might have convertible loan notes, safe notes, any type of convertible instrument. We'll just show that it's outstanding and it hasn't converted. So you'll then see there's no corresponding cap table detail because it sits in almost what is like a limbo state. And then the last piece we're looking at here is our equity plans. So this is really just showing us what plans we have in place. So again, I might have an options plan for my employees. I might have some different type of plan for maybe my management or executive or founding team. And oftentimes we'll hear of maybe RSUs, which are restricted stock units being issued to these or to these teams, management teams or exec teams. Maybe it's an RSA, which are restricted stock awards, but it's all specific to whatever you have in place. So this is really your overview and your dashboard and plus detail of your ownership. We create this by creating the settings in the background. So we'll upload any of your share classes. So you have your common stock, we have our preferred stock. Our team will actually do this for you. So we provide a complimentary onboarding service regardless of the number of stakeholders on your cap table. So you could have 5, you could have 105. We'll do a complimentary onboarding service for you and a reconciliation. Part of that is uploading some of the share class detail. I'm going to give you a quick look at what the preference shares look like. So this is the detail you're going to capture in the background. So common stock will be the top kind of half of info. You'll capture the financing round, the share class type, the board approval date, how many votes per share. And then for preference shares, we're capturing more of the details. So you've liquidation, you've seniority, you've pro rata or participation rights. We're capturing all of this info in the back end. Similar scenario for our instruments. So we're capturing any warrants. If you have warrants in place, we don't see that too much for early stage companies. You might come across it maybe if you have a partnership or maybe a design partnership that you might issue a warrant. We don't see it too much for early stage companies. More often than not, what you're going to experience is some type of convertible instrument. So this is really the instrument that will allow you to raise money early on without pricing your company. It's pretty efficient in terms of the legalities and the speed of execution, but it also allows you to issue to not have to issue shares and, like I said, not have to price the company early on. So it's a really efficient way, and it's a very popular way of for early stage companies raising capital right now. We see a mix of pre and post money safes, probably a little bit more of post money safes these days, and we'll also see convertible loan notes. So the main difference really between the safe notes and the convertible loan notes is the interest rates. So there'll often be an interest rate associated with the convertible loan notes, whereas a safe note won't have that associated. So I can click on any of these tiles to be able to see the background detail. Again, we will upload all of this information for you. You'll see the statuses, so all of mine are outstanding. If I wanted to convert these, and these will convert when we go through the round modeling tool, I'll show you how these get converted. But these will ultimately convert when we do what is referred to as a priced or an equity round. When we have a fundraising where an investor will come in and buy equity rather than using some type of convertible instrument to invest. And that will mean the terms that are built into these notes will convert into equity, and they'll convert into some type of share, either preference share or common share. So if I click on the convertible loan notes, I can see all the detail in the background. You'll see the principal amount. So that was the original investment, some of the dates that are going to be relevant, what financing round, the currency. This is, like I mentioned, where the interest rate will come in. So we're tracking all that detail. And then the advanced terms are going to be super important to just kind of start to understand and be aware of. Qualified financing amount, that's going to be important. If that's built in, that will mean it's going to have to be a certain amount raised for these notes to convert. And then you have a discount and or a cap. So you'll often see at least one of the two. Sometimes you'll see both, but ultimately an investor will be allowed the better of the two. So whether the 20% discount is a better deal or the 8% or the 8 million valuation cap. And then ultimately, what does all of this convert into? So we can select up here at edit, and I can say, okay, this is all going to convert into preference A shares, and then just save those changes. So all super simple. If I come back to the convertible instruments, I can really easily convert any of these notes. So I can just go through that process. If it's a convertible loan note, it will calculate the accrued interest, and then we can go ahead and submit that conversion, and everything will sit into our share class transaction. So this is just a ledger that will automatically track all of your transactions going forward. The second piece I mentioned is around fundraising. So this is the tool that we provide to you to be able to model out what it would look like if you raise money. So in this particular scenario, I've said, okay, what happens if I raise a 4 million seed round? My pre-money valuation is 20 million. I want a 10% option pool in place. So again, back to the hiring, so that I can have an option pool to be able to hire the best talent. And then I can say, okay, how many investors do I have on the table? So I have 4 investors ready to invest. I have 2 angels and 2 venture capital funds. At the same time, you previously maybe raised a pre-seed round on safe notes or some type of convertible loan notes. And this will allow you to be able to model out what it will look like if you convert all these convertible loan notes. So I'll select the box up here to convert them all. And then super simple, you just run that scenario. So it keeps everything on the platform, but it gives you an output, a visualization, and all of the detail of what it will look like post that investment round. So you have some high level information here to give you an idea of what the post money valuation will be. So that's our total investment plus our pre-money valuation. You have your round share price. So this is the new share price of your company. And really important to understand how much equity you're going to give away as part of that round. So you can model out and see how much equity you're giving away. You have a visualization here of pre versus post money, but really what we want to be able to provide to you is all the detail. So down below you have pre-money versus post-money side by side in columns. This will allow you as a founder to be able to start to be aware of dilution. So super important as a founder to understand the dilutive effects, number one, but also strategically how you're starting to think about that as you raise capital, as you think about maybe an exit in the future and holding on to as much equity as you can, but also being reasonable and being understanding of it's a natural part of the process. If you raise outside capital, you're going to have your stake diluted to a certain degree. So this just gives you an indication of what that would look like. We'll see all the new checks that are written, how much they own, how much they wrote, the price per share, and how many shares they're now going to be allocated. We've topped up our option pool back up to close to 10%. And then we've converted all the convertible loan notes. So this is what's oftentimes termed as convertible loan note or safe stacking. So this is the stacking of multiple convertible instruments, but just gives you an idea of how much equity that is going to take up. So that's a significant amount of equity on the 6 or 7 notes that we have in here. It's going to be 21% of your cap table as they convert. So really important to be able to understand those details. I can export all of this, so really easy to, again, to extract the detail. And this also allows you to do side-by-side comparisons. So I can just duplicate, maybe I have another 500K on the table and you can run that scenario. Super, super simple. The last piece I'm going to touch on is the stock options. So this is how we make it easy for you to administrate this going forward. This is something that starts off pretty simple. You have a couple of early employees. Maybe you actually issue the equity to them, so you directly issue shares to them. Maybe you have some early employees also that you've issued stock options to, so they're not directly getting equity, but they're getting options in the business. That's really where the administration comes in. And that can be quite a burden as you scale, as you bring more employees in. Maybe you have different stock option plans. We just try to make this as easy as possible for you to admin. So we'll create the plan pool number one. You would have heard me speak about the option pool. So this is really where your shares get reserved into as part of that option pool. And then we'll upload all of the legalities around your plan. So we don't draft any of these plans, but we'll upload all of the information. So you'll typically work with your legal counsel to design these stock option plans, and then we'll upload all the information to reflect it on the plan and the platform. So I'll show you what this ESOP looks like. I'll just click on that tile. It's going to give me a bunch of different information. So first and foremost, we have live status as a dashboard. You'll see vesting status, plan summary. You'll see all the plan level details. I can also open and close the exercise window here. So if there is a period of maybe liquidity or you want to open a window for employees to be able to exercise the options that have been granted to them, you can control that as an administrator. You can upload all your legal docs, and then we can digitize this whole process. So this is how we do what is termed for us as our online grant acceptance workflow. So it allows us to digitize this for our employees where they'll get pinged if they have options that have been granted or they have options that they can exercise. And then when you're thinking about your board, so you put your board together, they're assigned different roles. Maybe part of that is one board member needs to sign and approve the option grants before an employee receives them. We can build all of that into the workflow here as well. Vesting schedules are kind of the next piece that you're going to need to think about when you're issuing options to employees or management or executive team, or maybe it's board members and advisors as well. This just allows you to build in all of your vesting schedules. Most often what we see for employees is a 1-year cliff with a 4-year vest. This is super flexible in terms of what you can build into the platform. We can do time-based, and we can also create milestones. So maybe you want to attach milestones to your stock option vesting schedules. Maybe you have sales targets, maybe you have exit targets, company profitability, whatever it might be, we can build in the valuations here. And then all of this gets tracked in what is the second ledger. So we saw the share transactions ledger. This is then our equity grants ledger. So this really allows us to track everything related to grants. So whether they're options, RSUs, RSAs, whatever type of grant it is, we're automatically tracking the dates, the price, the number of shares, the type of option that's being issued. So you'll hear things like ISOs, or you'll hear things like NSOs, maybe regular stock options. All of these terms you'll come across as you start to think about this. This is where we'll automatically track all this information. The very last piece we'll go through then is your exercises and releases. So when the opportunity comes for an employee to exercise their options, which means they'll pay a discounted price for the options that were originally granted to them when they've gone through their vesting schedule. This is where we will manage all of this. So the employee will exercise their option, the administrator will see it in a pending approval state, they'll approve or reject, and then it goes into the approval history. So we can digitize all of that workflow for you. And that's pretty much a wrap. Hopefully, it gives you a nice idea of what our platform looks like. I think, like I said earlier, really the message we want to get across is you really should digitize this. Whether you use our platform or use another platform, we're super happy to have conversations, but it's really, really important to make sure, number one, you're tracking all of this information accurately, and then just starting to think strategically about what your cap table will look like as you think about fundraising, and then maybe a little bit further down the line when there's a potential exit. I think that's something we always kind of say to founders and early stage teams is we all hear the headlines of company XYZ getting bought for $1 billion, but ultimately they're buying the equity. Yes, they're buying the company, but they're buying the equity. So super important to keep track of all of this as you grow. So open the floor to questions. Please jump in. Kiona, thanks so much again for organizing. And yeah, welcome any questions.
Thank you so much for all of that information. That is very helpful. And thank you for sharing the platform with everyone here today. I do have a question just in case, while everyone else thinks through if they have questions or not. But time is really precious for a founder. So my question to you is, with the traditional management of equity and cap tables and things like that for a founder versus the tool that you shared here today, how much time do you estimate that could save a founder over time with their workflow?
Yeah, I suppose I don't have an exact time, I don't think, but like we hear anecdotes both on the administrative side, but also on the kind of like exit side. Like we would work closely with maybe some of the law firms or other key stakeholders in the industry, and you hear anecdotes of the amount of both time and money it takes to track down all of the historical transactions. So if a company is being bought or there's some type of transaction happening, they need to understand the timeline. So they need to understand what happened to pre-seed, seed, and all the financing rounds that have taken place, as well as all the grants that would have taken place in the meantime. So all of the transactions. So that can add up to a significant number of both hours, but also cost from a dollar perspective at that particular event down the line. But also at the start, like I think again, we're working with companies every single day that are coming from spreadsheets and tracking a lot of this on spreadsheets. And that's what we're trying to simplify. We're trying to create, and we have created what we like to think is a simple, easy to navigate, founder friendly platform that makes it super easy for you to be able to administrate all of this. And it's the type of thing that as a founder, you're doing a million things every day. You're firefighting, you're trying to think strategically, you're trying to motivate the team, you're building up your product, et cetera, et cetera. You have 101 different things to do. This is the type of thing that we want to be able to, for you to be able to say, okay, I have everything squared away. I know it's centrally secured or securely held in a platform. I know it's accurate and up to date. If I need to share it, I have it readily available to share. And if I need to make updates, it's super easy to be able to make updates. So doing that on a spreadsheet for us, it just carries so much risk. We all know spreadsheets can be corrupted. They can have different versions, and ultimately for our platform and pretty much every other platform in the space, that's the first thinking. That's the first principle thinking, is to create the single source of truth and not be worried about your spreadsheet being inaccurate, a formula being inaccurate, sharing or having multiple versions among multiple stakeholders. So time, I don't have an exact time saving, but I think we can all kind of see the difference between if we're using spreadsheets and having the worry of, okay, maybe is this inaccurate, having to go and do reconciliations versus having it centralized on a digital platform, knowing it's there. And it's the type of thing that at the early stage, you're probably not in it every single day. It's more of maybe once a week or maybe once every couple of weeks, just making sure it's accurate. Maybe you have an option grant to issue to a new employee. But the burden of the admin really comes as you scale. So as you get to Series A, Series B, Series C, you've more employees. That's really where the administrative headache will come, and that's where your time saving will significantly be seen.
Right. Awesome. Thank you so much for that. And before I start to close out, because I don't want to overlook anyone, does anyone in the audience have a question before um I move forward with my next question? Okay, I see a hand raised, but I can't see who it is. So if you want to throw it in the chat or come off of mute, feel free. No? Awesome. Okay, so my last question is for those who want to utilize the platform, get more information about the platform, and if it's a good time for them to start utilizing it and things like that, how does one get in contact with you? Is there a website that you easily can sign up on for a consultation or a demo, or what does that process look like for a founder?
Yeah, absolutely. We'd love to chat to anyone that is interested in having a discussion. So you can reach out directly to myself. I'll make sure you're guided through the process and kind of speed up the whole process. So Keon, I think you're going to share my email address
Mhm.
afterwards. So feel free to directly reach out to me. Also feel free to check out our website. We can share that link as well afterwards, just so you can see what that looks like. But I think the best way is just to send me a quick email, and then we can guide you from there.
Awesome. I'm just making a note here so I can make sure to add all of these things to the email. Awesome. We have
Perfect.
something in the chat. Okay, can you share the link here to the website? I'm assuming is what
Yeah.
is being asked.
See if I can drop that in.
So while Alan is putting that link in the
There you go.
website, if we don't or in the chat, I mean, thank you so much. If we don't have any more questions here, I will close out just by saying thank you so much, Alan, for all of this information. Not only was it very helpful to us, but I think that moving forward, as we think through as an organization, how we can be more supportive of our founders, making sure that we are tuned in and tapped in with tools like this, is going to be important to make sure that our founders continue to be successful. So thank you for that. Like we said in the beginning, we will make sure to share the recording, share the link to the website, make sure you have Alan's contact information so that if you are interested in getting more information, you can easily contact him and his team and reach out to them to set up time for a chat. And yeah, if we don't have any more questions, thank you so much to those who would like to join us for more webinars like this one. Feel free. Joan, do you have a question? No? Okay. Um, who
Thank
would
you.
You're welcome. For those who would like to join us for more webinars and other events like this, feel free to find more on our website, amplifystartups.com, as well as follow us on all of our socials, LinkedIn, Instagram, Facebook, at Amplify Startups as well. And thank you once again, Alan and JPMorgan Chase, for collaborating and partnering with us on this webinar today. And with that being said, we wish you well for the rest of your day, and we will see you next time.
Thank you very much. Appreciate it, Kiona. And thanks everyone for joining. I popped my email address into the chat, so I think Kiona is going to share it around. But thanks for your time, and definitely reach out if you have any questions. And all the best.
Absolutely. Thank you.
Have a good one. Take care.